What if I told you there are companies out there, right now, poised to make you serious bank in the long run? Companies that have been meticulously built, brick by brick, to withstand the test of time and market fluctuations. These are not just any companies, they are the titans of their industries, the innovators, the leaders, and the game changers. Imagine being part of their journey, reaping the benefits of their growth and success. Sounds intriguing, right? We're not talking about some get-rich-quick scheme, no sir. Those are fleeting and often come with high risks and empty promises. Instead, we're focusing on solid long-term investments that have the potential to grow your wealth steadily over time. In this video, we're about to break down 5 stocks that deserve a spot in your long-term portfolio. These are the stocks that have the potential to deliver strong returns, provide stability, and help you achieve your financial goals. We'll look at their performance, growth prospects, and why they stand out in the market. By the end of this video, you'll have a better understanding of where to invest your money for long-term success. These are the companies that have a proven track record, strong fundamentals, and a clear vision for the future. They are the ones that continue to innovate, adapt, and grow, even in the face of challenges. By investing in these companies, you're not just buying stocks, you're buying a piece of their future success. We're talking about companies on the cutting edge of cybersecurity, protecting our digital world, and the social media giant pushing the boundaries of virtual reality. These companies are addressing some of the most pressing challenges of our time, from data security to digital communication. They are the ones shaping the future of our digital landscape, and by investing in them, you're supporting their mission and benefiting from their growth. These aren't just stocks, they're your ticket to financial freedom, your chance to build a brighter future. If you only watch one video today, make sure you watch this one all the way till the end. But before we dive in, hit that like button. Let's get 1,000 likes on this one. Share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Let's kick things off with a company that knows how to quench your thirst for profits. Constellation Brands, ticker symbol STZ. Now you might not recognize the name immediately, but trust me, you know their brands. We're talking Corona, Modelo, Robert Mondavi wines. These guys are a powerhouse in the beverage industry. Constellation Brands has a knack for scooping up popular brands and making them even bigger. They're not just riding trends, they're setting them. Their focus on premiumization, offering higher-end products, is a smart move in a market that's always looking for the next best thing. And here's the kicker. They're not just about beer and wine. Constellation Brands is also diving headfirst into the world of cannabis with a strategic stake in Canopy Growth. Talk about diversifying your portfolio. This is a company that's not afraid to shake things up and stay ahead of the curve. They're constantly innovating, expanding their reach, and adapting to changing consumer tastes. That's the kind of forward-thinking strategy that gets my investor senses tingling. Constellation Brands, known for its strong portfolio of beer, wine, and spirits, currently sits at a market cap of $33.64 billion. The company reported $10.12 billion in revenue this year. However, despite its scale, Constellation posted a net income of negative $81.40 million, raising some red flags among investors and analysts. It's a reminder that even household names can experience turbulence, particularly in sectors facing shifting consumer trends and rising production costs. Remember, we're in this for the long haul, and Constellation Brands has all the ingredients for sustained growth and delicious returns. Hold on to your hats, folks, because we're about to dive into the world of high-performance computing with Advanced Micro Devices Inc., ticker symbol AMD, a company that's been quietly crushing it in the semiconductor industry. Now, unless you're a tech whiz, you might not think much about the chips that power your devices, but let me tell you, they are the unsung heroes of the digital age. AMD is like the David to Intel's Goliath, constantly innovating and challenging the status quo. They're not just keeping up, they're pushing the boundaries of what's possible with their CPUs and GPUs, powering everything from gaming PCs to data centers. And here's the thing about AMD, they're not just riding the wave of the digital revolution, they're driving it. The demand for their products is only going up as we become more reliant on technology. Think cloud computing, artificial intelligence, self-driving cars. AMD is at the heart of it all. Now I know what you're thinking, investing in tech can be risky, but AMD has a proven track record of delivering results, and their future looks brighter than ever. The company boasts a market cap of $175.92 billion, with 2024 revenue reaching $25.79 billion. Net income came in at $1.64 billion, and earnings per share landed at $1.02. But what really stands out is the valuation. AMD is currently trading at a P/E ratio of 106.58. That might seem high, but consider this. At its current stock price of $108.70, it's still trading nearly 73.5% below its estimated fair value of $188.57. That gap has caught the attention of growth-oriented investors who see potential upside if AMD continues to gain ground in AI and high-performance computing. They're a company that's firing on all cylinders, and that's the kind of momentum we want in our long-term portfolio. Now let's talk about a company that's practically synonymous with investing itself. Berkshire Hathaway, ticker symbol BRKB. Founded in 1839 as a textile manufacturing company, it has transformed into a massive conglomerate under the leadership of Warren Buffett. This transformation is nothing short of extraordinary, turning a struggling textile company into one of the most valuable and diversified companies in the world. Led by the legendary Warren Buffett, often referred to as the Oracle of Omaha, this conglomerate is like the ultimate diversified portfolio, and you get to own a tiny piece of it. Buffett's investment philosophy is centered around value investing, which involves picking stocks that appear to be trading for less than their intrinsic value. His approach has made Berkshire Hathaway a powerhouse in the investment world. Berkshire Hathaway owns a massive range of businesses, from insurance giants like GEICO to consumer favorites like Dairy Queen. GEICO, for instance, is one of the largest auto insurers in the United States, known for its catchy commercials and competitive rates. Dairy Queen, on the other hand, is a beloved fast food chain famous for its ice cream and burgers. The conglomerate also includes 𝗗𝗟𝗧, a leading manufacturer of high-performance alkaline batteries, and Fruit of the Loom, a well-known brand for clothing and underwear. These companies are household names, and their inclusion in Berkshire Hathaway's portfolio speaks volumes about the conglomerate's diverse interests. They're also major shareholders in publicly traded companies like Apple. Berkshire Hathaway's investment in Apple is one of its most significant holdings, reflecting Buffett's confidence in the tech giant's future. Apple, known for its innovative products like the iPhone and MacBook, continues to be a leader in the technology sector. Additionally, they hold substantial stakes in Bank of America and Coca-Cola. Bank of America is one of the largest financial institutions in the world, providing a wide range of banking and financial services. Coca-Cola, a global leader in the beverage industry, is another iconic brand in Berkshire Hathaway's portfolio. Talk about having your fingers in all the pies. This extensive diversification allows Berkshire Hathaway to mitigate risks and capitalize on opportunities across various sectors. Whether it's finance, technology, consumer goods, or insurance, the conglomerate has a presence in almost every major industry. This diversification is one of the key strengths of Berkshire Hathaway. It means they're not overly reliant on any single industry or economic trend. This strategy provides a safety net, ensuring that the company's overall performance remains stable even if one sector faces challenges. It means they're not overly reliant on any single industry or economic trend. If one sector is down, another one might be up, providing a buffer against volatility and offering long-term stability. This approach has been a cornerstone of Buffett's investment philosophy, emphasizing the importance of a well-rounded portfolio. If one sector is down, another one might be up, providing a buffer against volatility and offering long-term stability. This balance is crucial for investors looking for consistent returns over the long haul. By spreading investments across various industries, Berkshire Hathaway reduces the impact of market fluctuations on its overall performance. Think of it like this. Even if one of their ice cream cones melts, they've got a whole buffet of businesses to keep things cool. This metaphor perfectly illustrates the company's ability to weather economic storms. When one business faces difficulties, others can pick up the slack, ensuring that the conglomerate remains resilient. They've got a whole buffet of businesses to keep things cool. This extensive range of businesses acts as a buffer, providing stability and growth potential. It's like having multiple streams of income, each contributing to the overall financial health of the conglomerate. And that's exactly what we're looking for when it comes to long-term investing. Diversification is key to building a robust investment portfolio. By investing in Berkshire Hathaway, you're essentially buying into a diversified collection of high-quality businesses, each with its own strengths and growth prospects. With a staggering market cap of $1.11 trillion, the company posted $424.23 billion in revenue this year. Net income reached an eye-popping $89 billion, with earnings per share coming in at $35.71. What's more, Berkshire's P/E ratio stands at just 14.41, reflecting a valuation that many still consider conservative despite its size. It's a testament to Warren Buffett's long-standing strategy of patience, diversification, and disciplined capital allocation. You don't want to put all your eggs in one basket, right? This age-old adage holds true in the world of investing. Concentrating all your investments in a single sector or company can be risky. Berkshire Hathaway's diversified approach minimizes this risk, offering a more secure investment option. Berkshire Hathaway takes that concept to a whole new level, giving you exposure to a wide range of established, profitable businesses. This exposure not only reduces risk, but also enhances the potential for returns. With a mix of stable, income-generating companies and growth-oriented investments, Berkshire Hathaway offers a balanced investment opportunity, giving you exposure to a wide range of established, profitable businesses. This diversified portfolio is a testament to Warren Buffett's investment acumen and his ability to identify and invest in high-quality companies. By holding shares in Berkshire Hathaway, investors can benefit from Buffett's expertise and the conglomerate's robust business model. Alright, moving on to our fourth stock, and this is one that I think has huge potential in a market that's only becoming more important. I'm talking about Palo Alto Networks, ticker symbol PNW. Now, you might not see their name plastered everywhere, but trust me, in the cybersecurity world, they're kind of a big deal. Think about it. Every day there are more and more devices connecting to the internet. Your phone, your laptop, even your fridge. That's a lot of potential entry points for hackers, right? That's where Palo Alto Networks comes in. They're not your average antivirus software company. They're talking next-level, sophisticated security solutions for businesses and governments. Think firewalls, threat detection, endpoint protection, the whole 9 yards. They're basically the security guards protecting your data from the bad guys. And the best part is, this market is only going to get bigger. With a current market cap of $126.93 billion, the company earned $8.03 billion in revenue this year. Net income reached $2.58 billion, while earnings per share landed at $1.88. Trading at a P/E ratio of 101.80, the stock reflects high investor confidence in Palo Alto's future, especially as demand for enterprise cybersecurity solutions continues to surge in an increasingly digital world. Cybersecurity spending is expected to skyrocket in the coming years, and Palo Alto Networks is positioned to be a major player in that growth. Alright, let's talk about a company that needs no introduction. Meta Platforms, formerly known as Facebook with ticker symbol Meta. Now I know what you're thinking, Facebook? Isn't that like, so yesterday? But hear me out, because Meta is about so much more than just your newsfeed. We all know Facebook, Instagram, WhatsApp. These platforms are used by billions of people worldwide. That's a massive user base, and it gives Meta an incredible amount of data and reach. But what are they doing with it? Well, that's where things get interesting. Meta is betting big on the metaverse, a persistent, immersive digital world that's still in its early stages. Think virtual reality, augmented reality, and everything in between. It's a concept that has the potential to revolutionize the way we interact with technology and with each other. And Meta is investing heavily in building this metaverse. They're developing VR headsets, creating virtual worlds, and exploring new ways to connect people in these digital spaces. It's a long-term play for sure, but one that could pay off big time if they can pull it off. Meta Platforms remains a dominant force in the tech sector. The company commands a market cap of $1.59 trillion and posted $164.5 billion in revenue for 2024, with net income at $62.36 billion and EPS at $26.32. Meta continues to show strong profitability. Its P/E ratio stands at 23.73, and while the dividend yield is modest at 0.32%, the company's financial health and continued investments in AI and platform innovation keep it firmly on the radar of long-term investors. And there you have it, 5 stocks that I believe have the potential to deliver long-term success. These stocks were chosen based on their strong fundamentals, growth potential, and the industries they operate in. Each of these companies tells a different story, whether it's undervaluation, market dominance, strategic positioning, or financial challenges. Together, they reflect the diversity and complexity of today's investing landscape, offering opportunities and lessons for every type of investor. But remember, investing is not a one-size-fits-all approach. Each investor has unique goals, risk tolerance, and time horizons. Remember, this is just a starting point. You need to do your own research, understand the risks involved, and make sure these investments align with your overall financial goals. It's crucial to stay informed and continuously educate yourself about the market trends and economic factors that can impact your investments. And speaking of financial goals, if you're serious about taking your investing game to the next level, you need to check out my Value Stocks Investing Master Course. This course is designed to provide you with in-depth knowledge and practical strategies to identify undervalued stocks and make informed investment decisions. I'll teach you everything you need to know about finding and evaluating undervalued stocks, managing risk, and building a portfolio that can help you achieve your financial dreams. The course includes video lessons, downloadable resources, and interactive quizzes to test your understanding. But wait, there's more. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, then you should definitely consider joining the Stocks Galore Patreon community. Our Patreon members get access to a wealth of resources that are not available to the general public. Join the Stocks Galore Patreon today and take your investing game to the next level. As a member, you'll receive detailed reports on the latest market trends, stock recommendations, and personalized investment advice. Plus, you'll be part of a supportive community of like-minded investors who are all working towards their financial goals. Our members there get full in-depth analysis on most of these stocks I mention here. We dive deep into the financials, management teams, competitive advantages, and potential risks of each stock. This level of analysis can help you make more informed investment decisions and increase your chances of success. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. By joining, you'll also get access to our monthly Quanda sessions, where you can ask me any questions you have about investing, stocks, or the market in general. Link is in the description. Don't miss out on this opportunity to enhance your investing knowledge and connect with other passionate investors. Now I want to hear from you. Which of these 5 stocks are you most bullish on and why? Share your thoughts in the comments below, and don't forget to like this video, subscribe to the channel for more investing insights, and hit that notification bell so you never miss an upload. Until next time, happy investing. Keep learning, stay curious, and remember that the journey to financial success is a marathon, not a sprint.